Hello, hi. Okay, today I just wanted to share with you about after the end of June, right, and then at the beginning of July, all these quarterly second quarter earnings results coming out for all the Dow Jones company, S&P 500 companies, FANG stocks, and all that. Everyone was talking about earnings capitulation or earnings compression would be the next negative catalyst. Although we have had like 6 months of market correction or crash, whereby Nasdaq went down 30%, plus 34, I think, and Dow was down by over 20 over percent. But now we are on 5th of August. Most some important companies like Google, Facebook, Meta, and Amazon, Tesla have already reported their Q2 earnings. All that fear didn't really happen. As you can see, PayPal, a fintech company, with their number one Venmo mobile e-wallets, just doing just as well. There was no even mention about high input costs due to inflation or high wages costs or lower transaction volume. In fact, revenue was just as good as Q1 and fourth quarter. And so the stocks actually went up. In fact, acquisition play was also part of related to PayPal. There was not really acquisition; it was more like an investment. There was a hedge fund investing in the company because quite many Nasdaq company are at low PE ratios or low price to sales ratio. Like if you look at Facebook, it's actually at a price the PE ratio of around 12 to 13 right now. So, and if you look at Google as well, there was the Q2 earnings was just very marginal increase. In fact, it didn't actually go down if everyone was expecting it to go down. Um, so the earning per share went down just slightly. As you can see, the tech stocks has had a big run, or has had tremendous growth of like double digit growth of like 20 over percent in 2020 2021, and it's only fair that they 2022 onwards they start to cool off, whereby they start to have maybe high or low double digit growth like 10 to 15%, or a high single digit growth around 8 to 9%. So so there are still pretty much continued good earnings for a significant company. I mean, half or at least for the Q2. And I think even during the June period or May period, there was already an oversold position, whereby people was expecting this fear coming on board on this Q2 earnings compression, but it didn't happen. And most FANG stocks actually meet estimates or beat estimates. If you look at Netflix, um, it has growth, has had a 6 million growth of subscriber in 2020 to 2021, and for them to lose 200,000 in Q1 and a million subscriber in Q2 is actually very reasonable. You had a big run and you just taper down. And if you look at an amortized 3-year period, actually they have had, of course, definitely a growth, still a net growth of about 4.8 million, which you divide by 3 is about 1 over million per year. So but the shares have actually dropped down to even before the 2019 period. So I suppose most stocks are pretty well positioned to sustain at 12,000 plus Nasdaq kind of level. Even though many people say that this is a relief rally or a bull trap um, or that, I think to sustain at 12,000 over is actually quite fair. And then if you look at oil prices has already come down a lot. And if you look at US, there are quite a lot of companies, oil and gas company or fertilizer export companies that are benefiting from the Ukraine and Russia war. They are just as busy as ever pumping out oil. It's just that they don't have enough refinery to refine them and don't have enough shipping container to transport the oil and the gases to Europe in the quantity that they need, if, with the Nord Stream disconnection. So you're also looking at Tesla, for example. Everyone was expecting it has gonna suffer from Shanghai closure and lower delivery results, higher input costs due to supply chain crisis. Well, it didn't happen. They actually beats earning as well, and they have, you can see 1.85 in earnings per share, and they reported a revenue of 11.96 billion. So year to year basis, they actually did much better, and even quarter to quarter basis as well. So don't discount those companies that have pricing powers. And a lot of companies also announced layoffs, and I think layoffs will actually help them to increase their Q3 earnings. And this would be something where I said at this current pricing of the uh, Nasdaq companies, which are very healthy and not overvalued and just coming out a bit from the oversold position. And I think they are pretty much all at fair value. And overall, if you look at PayPal, which are not affected by transaction volume, especially in US, 70% of the demand are consumer driven. So fintech would sometimes can be a good indicator. So there's been a lot of money pumping out by a lot of central banks for the past 2 years. So with Bank of England increase of 0.5% interest rates today, the highest ever they have ever done in 20 years, and so is US since the Paul Volcker period. 2 months of consecutive 0.75 basis points. But there are just a lot of too much money. Let's say you got $100 um, extra printout for the past 2 years, and to take away $20 to $30, you still got a net positive of 70. So I think there's still a lot of money flowing in the system. So looking at all this, I believe this is not really all this market data, right? So it's not really a market bull trap or anything. And just show you about some of the profits. They are still remaining flat. At least it's not down. And if you look at Baba as well, today had a very good earnings and better than year to year basis. Uh, then PE ratio of Google is 21. Okay, slightly high compared to other companies. If you look at PE of Facebook, is only at 13. Usually their industry average is around 18 to 19. So Google's price to sales ratio 6, which is slightly on the high side among FANG stocks. And then of course you look at Apple, the most important company in the US. FANG is constitute 40% of the Nasdaq index, so holding very strong. If you look at their service sector, their Apple Pay and Apple download device services, that has really really strong potential growth, even though iPad, all the hardware earnings are dropped a bit. So looking, definitely Q2, people expect it to be the worst second quarter results ever for the, probably since COVID period, but it didn't really happen. So there you go. Every pretty much the big boys are there, and then selected few good Russell small to medium cap stocks are also doing pretty well. So yeah, thank you very much, and I hope you like the video and see it as help you to improve your due diligence on stocks, and hope to see you again. And please click like and subscribe to the video. Thanks, God.